Solana's perpetual futures funding rate turned negative this week, signaling a shift in market sentiment. Typically, a positive funding rate indicates strong bullish demand, but a negative rate means short positions are dominating. On Tuesday, the annualized funding rate for Solana's futures dropped to -3%, a sharp drop from +8% just days earlier. This suggests traders are actively betting against the price of SOL, likely due to a combination of declining network activity and growing competition. From rival blockchains like Base and Hyperliquid, the funding rate is a key indicator of market sentiment and liquidity positioning. When it turns negative, it means short sellers are gaining influence, and market participants are hedging against further declines. The price of SOL has already seen a 15% correction since peaking at $98 on May 11. A recent retest of the $83 level failed to hold, and the negative funding rate is a sign that bearish. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Sentiment is gaining traction. The drop in price is not just a result of market sentiment, but also a decline in on-chain activity. Solana's decentralized exchanges, DEXs, have seen a 56% drop in volume since January, which has directly impacted the ecosystem's revenue. The network's DApp revenue has stabilized around $20 million per week, down from an average of $35 million in January. This decline is mirrored by the DEX volume, which has fallen from $25 billion per week to $11 billion. As more users and developers shift to competing platforms, Solana faces a growing challenge in maintaining its market share. The top DApps on Solana, Pump, Axiom Pro, Phantom, and Jupiter, now control 65% of the market, but even their dominance is under pressure from rising alternatives. The broader crypto market is also shifting, with a growing fear that the recent memecoin frenzy has lost momentum. This has led to reduced demand for Solana-based tokens and applications, further contributing to the bearish trend. The funding rate is not the only indicator of this shift. Network activity is a key driver of token demand, and with fewer transactions and less user engagement, the fundamental case for holding SOL is weakening. While the price alone doesn't tell the whole story, the combination of declining DEX volume and a negative funding rate suggests that traders are preparing for further downside. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Key level to watch is $78, where the price may face renewed pressure. If the market breaks below this level, it could trigger more aggressive shorting and further capital outflows from the Solana ecosystem. However, the market remains fluid, and a sudden influx of bullish activity could reverse the trend. The key question now is whether Solana can stabilize its DEX volume and DApp revenue to regain investor confidence, or if the bearish momentum will continue.